Good morning, good morning, good morning. 1 second. Give me 1 second. I'm gonna let a few people come in the live stream. Put some music on. 1 second. All right, good morning. Can you hear me? Can you hear me? Mic check, mic check. Are y'all able to hear me? Am I still muted? Okay, appreciate it, appreciate it. All right, man. Shout out to y'all, man. What's up, Lenny? What's up, Scott? What's up, Big Beat Down? Shout out to you, man. Appreciate y'all joining this morning. Today is Saturday, July 19th, 2025. So normally I do a lot of crypto videos, but in this one, this is more specialized for my private community. I want to do these more often. These are more going to be more educational. So if y'all got any questions, answers, especially you, Lenny, for y'all that are in the Discord, if y'all got any questions and y'all Patreon members, anything that y'all need me to answer this week pertaining to what happened this week, I can answer it. So 1 second. Do this right quick. How's everybody doing this morning, man? This week in the market, we had a better week than what we had last week in the NASDAQ and the futures market. This week was way better. It was still a difficult week, okay? We just recently broke all-time high again with the NASDAQ. And I'm also the S&P as well. So if you don't know, they trade step by step together. They're slightly different in price, but they kind of trade step by step together. This on Saturdays, usually sometimes after Friday in the afternoon, but if recently I've been doing like live streams with crypto, but normally when I'm not in the public's face or trying to be entertaining on YouTube or whatnot, I am in my private office or whatnot, and I'm preparing for the week ahead. So I'm kind of like doing forecasting what I can expect for the upcoming week of trading. So I like to do my analysis freshly on like a Saturday morning. If I can't do it Saturday morning, sometimes Saturday nights. And on Sundays, I'm usually just chilling. Okay, I'm just chilling, just waiting for the market to open on Monday. Okay, so y'all, if you're in the Discord, in the Patreon, and y'all need to be doing this on your own. This is what I'm trying to get y'all to do. Start doing, because this is more. If you're in the signal service, it's more of a mentorship / signal. So I'm mentoring you on what to expect, how to analyze the market, how to forecast. And this is the things you should be doing. If you went through the lessons, you already got this. Okay. If you went through my lessons, you kind of already got some of these fundamentals. So right now I'm starting on the hourly time frame. Okay. I'm starting on the hourly time frame. This is the NASDAQ. Big Beat Down. You say you're just getting ready for bed. Where are you from, Big Beat Down? What part of the world are you in? What part of the world are you in? So the first thing I'm gonna do, let's go ahead and back test right quick. Let's back test. So what I'm doing right now is I'm zooming in. I'm looking at price from this week, and then I'm looking at last week's price. So the week is over with. So now this current week right here, this is going to be last week. So what I'm doing is let's look at what happened the prior week to this week. Oh man, shout out to Australia in the building. I wish you could have if only it was on similar time frames, you probably won't be so tired or whatnot. Shout out to Australia though. I appreciate you. So what I'm doing is let's back test, and you should back test every week. So Lenny, what's the first thing I need to do? Okay, what's the first thing am I looking for when I'm back testing? What's the first thing I want to do? So if you don't know, I'm looking between these two vertical trend lines. In between these vertical trend lines, where I got these vertical trend lines, this is representing the week of trading. So if we just focus on these two vertical trend lines right here, you can see the current week that just passed. And what we're doing is we're looking at price on intraday or intra-week. So anything below the daily time frame is intra-week, intraday price action. That's more short term. Right now, you get into day trading territory. Anything above the daily and higher, that's long-term analysis. Okay, so we're looking at intraday, intra-week analysis. What's up, Daryl? Appreciate you joining, man. Lenny, yes, we're looking at the previous week's highs and lows. So right now, I'm gonna outline this week's highs and lows, but I want to look back at what happened during this week right here. Okay, I want to look back at what happened during this week, because this is gonna allow us to see how we traded this week. So I'm gonna outline this high right here. Okay, that high right there is buy side liquidity. That's where the pending orders are in the market. What's up, Barton K? Shout out to you. That's where the pending highs are in the that's what old highs are in the market. Old pending orders. Old pending orders. So I'm gonna clone that. I highlight that high, and then I'm gonna come down and I'm gonna highlight this low right here. This was the low of the week and the high of the week for this particular week. Okay. Which I already got this outline. I'm just gonna illustrate. This is the first thing I do at the end of the week. I want to find, okay, where did they leave behind the liquidity in the market? Because price is always going to want to seek liquidity. Okay, price is always going to want to seek that liquidity. So below the market is sell side liquidity. Above the market is buy side liquidity. Okay, that's what I'm outlining. So on Sunday, that begins the week of trading. Sunday, we don't trade on Sundays because there's not a lot of volume. There's not a lot of liquidity in the market. Okay. So let me do this. I'm gonna throw up my daily dividers. This is gonna help me illustrate and outline the days of the week. Intraday, okay? So you can see these extra vertical trend lines. If I just zoom out, in between each one of these vertical trend lines are the days of the week. So Sunday, Monday, Tuesday, Wednesday, Thursday, Friday. In the traditional markets, the markets are from Monday to Friday, okay? We don't trade on Sunday. But we open up on Sunday, okay? We open up on Sunday at 6 o'clock p.m. And tomorrow, the same thing happens. We're going to open up at 6 o'clock p.m. And when we open up on Sunday, we kind of start trading lower, okay? And when we traded lower, we went and took out this low right here. This was the low from Thursday of this particular week. So I'm going to outline that. That's sell side liquidity. Sell side liquidity right there. Okay, below that low is pending orders. So as soon as the market opens up on Sunday, the market starts to consolidate. Let's go down to lower time frame, 15-minute time frame. So as I drop down to the 15-minute time frame, you can see price becomes more cleaner. It becomes more fractal or whatnot. And you can see more refined price action, because as you drop down lower, you're getting closer to price. If you're just zoomed out on like higher time frames, you're not able to see this type of price action. So, but you must understand what the higher time frames are doing for directional purposes. Understanding the higher time frame allows us to understand, okay, are we going higher or are we going lower? Okay. Shout out to the people that's just joining. Make sure y'all subscribe. Let me explain that right quick. I just hit 1,000 subscribers last night, and I was ready to celebrate. Okay. But YouTube quickly snatched about 30 subscribers. Okay. So I think those were bots. It could have definitely been bots. So I'm not sure, but they definitely snatched them. So I'm down to like 971 subscribers. So if you're brand new, please subscribe. How you doing, Lucy? Shout out to you. I appreciate you joining. If y'all just joining, this is more dedicated to my Patreon members and the people in the Discord. So if you're not signed up into the Discord, the Patreon, click the link in the description, get in there. This is more of a coaching session. And in the future, as this grows, this is going to be more privatized. So as my Patreon and Discord grows, I'm going to make this more private. So we're going to do this like every weekend on the weekend, so I can give y'all these lessons. This is included. So if you're paying for the Patreon and the Signal service, this is going to be included. Right now, I'm just doing it for free to kind of market and promote my my platform. Okay, back to the point. So Sunday, you can see if we look at these two vertical trend lines, let me outline it. You see in between this one and this one, this between that is Sunday. Sunday's trading only goes from 6 o'clock p.m. in the afternoon to 12 o'clock midnight. That's why I say we don't trade Sunday. Give them Sundays. Don't feel like you need to jump in the market on Sunday because it's going to do the same function every Sunday. Okay, Sunday. We just open up. Yes, and as soon as they open, they attack the sell side liquidity. They take it out, and then it consolidates, okay? You don't want to be in this chop, okay? That's high resistance. Let them have it. Then we cross over at 12 o'clock midnight right here. This vertical trend line represents 12 o'clock midnight Monday, okay? Crossover on Monday. Let me clone this. Monday. We cross over at 12 o'clock midnight on Monday. 12 o'clock midnight starts the true day for us in the United States. 12 o'clock midnight, Eastern Standard Time. That starts the new day of trading. And shortly after 12 o'clock midnight, we go into London session. London session is from 1 a.m. to 5 a.m. So during London session on Monday, and this is what we're doing is we're reviewing, we're back testing the week, okay? On the higher time frames, I was bullish. So let me just do this right quick to get it out the way. Let's go out to the weekly. Out to the weekly time frame. This is the futures contract if y'all joining. So based on the weekly time frame, give me a second, y'all. I'm gonna get to this in a minute. Let me go back down to the 15 minute. I'm gonna tell y'all what I think in a minute. Let's just back test intraday right quick. And essentially what you're doing is you're trying to look for the previous day's highs and lows, okay? Previous day's highs and lows. You want to identify the previous day high and low because that's where the liquidity is in the market. Okay, so you can see on Monday, we cross over at 12 o'clock midnight. We trade lower at London, 1 a.m. to 5 a.m. Eastern Standard Time. That is the London session. We trade lower and we take out the liquidity from, well, we retest the liquidity from Thursday, okay? They drop it low, they scoop up buy orders, and then displacement. There goes that institutional sponsorship that I be talking about all the time. When you see that rapid movement after taking out liquidity, when you're looking at liquidity pools, either higher or lower, you want to see this reaction. You want to see if you're bullish on the higher time frame, you want to see price drop down to liquidity, grab the liquidity, and you want to see displacement. That's your signal to get long, okay? That's your signal to get long. So Monday was kind of I forget what happened Monday, but Monday was an exciting day. Did I trade Monday? Let me see right quick. 1 second. I know I traded, but I forgot what I did on Monday. Trading executions. Yeah, that's my trading on Monday, okay? I did a lot of, so do you see where I'm purchasing price? You know what I'm saying? Do you see where I'm buying price at these levels? Because I know as they drop down to scoop up liquidity, I'm looking to get long. There goes my long entries. You see that? See these orders? These are my executions. Because I know price wants to reverse and I'm only looking for buys, okay? So I purchase and then I sell, okay? You see these red highlights? I'm selling because I'm selling at these highs, Sunday's highs, and then also new week opening gap. I'm gonna go over that in a minute. And you can see me still purchasing. I did a lot of activity on Sunday, and Monday. And then Tuesday, I'm in here scalping. You can see this, okay? You can see all this scalping and whatnot. And this is more difficult, okay? The scalping, when you see markets chopping around, you don't want to be in that. So you can see all my executions, okay? So let me hide that. This is all my activity. You see that every week? This is all my activity in the market. You can do that on TradingView by looking at your execution. So you go to settings, executions. So I had a lot of activity in the market on Sunday and Monday, doing a lot of scalping. So I'm bullish on the week. And I wanted to see price go higher. How high do I wanted to go? And how high do I wanted to see? At minimum, I wanted to see it take out the previous week's high. And that's what we did on Monday. We did all that on Monday. We went low. We took out the previous week's high on Monday. See that? Because it was seeking liquidity. It went and took out the liquidity, okay? Now, if we were just using the economic calendar, what happened this week? So Monday there was no news, but we had some activity on Monday. That's kind of rare, but we got it. It can happen. And Tuesday, if you don't know, it was a chop fest. Tuesday, Wednesday, and Thursday was a chop fest. Mainly Tuesday and Wednesday. Tuesday and Wednesday was difficult days, okay? If y'all remember in the Discord and if y'all remember in the Patreon. Tuesday and Wednesday, because of the economic calendar, we had a lot of high impact news. On Monday, they went ahead and took out the previous week's high. Now let's look at Tuesday. You said Wednesday was solid. We're going to review it. Look at Tuesday. So as we enter on Tuesday, you can see the choppiness, okay? They're holding price, and we already took out the previous week's high, okay? This type of price action, let me outline it for y'all. Let me highlight Tuesday. Trying to get warmed up to this, and analyzing and talking this morning. And if y'all got any questions, you know what I'm saying, don't hesitate to ask any questions. Any questions y'all got, because y'all gonna definitely be asking me. Clone. There we go. Clone. Y'all definitely gonna be asking me in the Discord. Then now's the time to ask me while y'all got me live, okay? So I can show you live. So if y'all got any questions, go ahead and ask me. So as we go into Tuesday, we know on the economic calendar, okay, at 7:30 a.m. we got high impact news. And then what we've been experiencing lately during the market open, it's been a chop fest. At 9:30 a.m., it's been a chop fest. So you kind of want to let that settle out the first 30 minutes of trading. So from 9:30 to 10 a.m., that's that first 30 minutes in trading. You kind of want to let that pass by because it's been a chop fest. So 7:30 right here, you see that vertical trend line? Ahead of that, and this is representing the news right here, this trend line. Ahead of that, you can see, okay, we just chopping around. And then during London, we chopped around and we came up and took out the previous day high right here. That was Monday's high right there. Above that high is buy side liquidity. So I'm gonna highlight Monday's high. You can see us trade above it just like that. And I'm not interested in this. I know that we have high impact news at 7 a.m. So you kind of want to wait and sit it out. And when you start seeing price do this function right here where it's just back and forth, look at the wicks. You see all the wicking back and forth, very high resistance. And then we cross over at 7:30. That's the news. And you want to sit that out because what they do is they act like they want to sell it off. And then they sharply spike it up again. And then they get people chasing both directions. They get sellers trying to short this, and then they spike it up and people try to buy the breakout. And then guess what they do? They hold it and people are trying to buy it. And guess what? They tank it just like that. At 9:30 a.m., that starts the market open. 9:30 a.m., let me highlight. I'm using another trend line. 9:30 a.m., give it another color. 9:30 a.m. to 10 a.m. That's the first 30 minutes in trading. That's a key window in time, the first 30 minutes of trading. So they spike it up, they get people wanting to buy the breakout, and then they short it. And then they do the chop dance up in here. They go up again, and then they sell it off, and then they bring it up. So this is all manipulation, okay? They did this the entire morning. They chopped it around. They confused traders. They didn't know, traders didn't know if they wanted to go long. Traders didn't know if they wanted to go short. So they're getting caught off guard. And you got to let this pass before they show you the real move. How do you know when they're going to show us the real move? Yes, Lenny, seek and destroy. That's what they're doing. It's designed. It's algorithmic, okay? It's designed to do that. It's algorithmic. 1 second. All right. Yes, it's designed to do that, and it's algorithmic where they just do this back and forth chop dance, and they want to get you off sides. And we can anticipate this whenever we have high impact news, okay? They do it all the time. In certain events, like when Jerome Powell is talking, FOMC, non-farm payroll, even let me see, when the president talks, they do this function all the time. And it also depends on what day of the week are we in. Are we at the end of the week? It all depends. Every day in the market is a new day. But you got to be able to outline, you got to be able to identify when these scripts are happening. And when I say scripts, I'm talking about price. It's algorithmic, and it performs different scripts in the market. Consolidation, expansion, retracement, reversal. Whenever price goes into a consolidation, automatically think high resistance. Okay, just think, okay, they about to chop everybody out. When you see a consolidation in price, you got to be cautious and be like, okay, I'm gonna sit this out, because look at this consolidation right here. 1 second. Look at this consolidation right here. That consolidation right there, you got to be cautious, because that's just an indication that, okay, this is high resistance because of the wicks, because of the chop. The wicks and the chop. If y'all just joining, man, make sure y'all smash that like button. I appreciate y'all joining. The wicks and the chop, okay? High resistance. And then they make it even worse as we go into the market opening. And they held it from the entire AM session, 8:30 a.m. to 11 a.m. That's the New York AM session. And then they crossed over from 11 a.m. to the entire lunch. So from 11 a.m. to 1:30, they continue to chop it around. So this entire day from morning to lunch was choppy. And then in the PM session, they loosened it up. You can see it. It starts to loosen up. What do I mean by loosen up? You start seeing wider candles, and that chop starts to fade away. And then they start to displace it lower. So during the PM session, which is from 1:30 p.m. to 4 o'clock p.m., price loosened up and it traded down. Now, let me go back in price. Let me go back. And I went over this, and I'm going to go over this in my my pro lessons when I create them. Every Sunday, which you should be doing this right now, every Friday close. So whatever price Friday closes at, you want to highlight that. So let me zoom in right quick. So on this particular week, Friday, it closed. This candle right here was Friday's closure, okay? And then you want to highlight the opening price from Sunday. That's called the new week opening gap. That's a key. This is hidden from retail. You don't know if you don't know. It's called a new week opening gap. Let me show you what it looks like. I got them all layered throughout my chart. As you can see, I'm going to teach it. And I'm going to go ahead and give it to y'all if y'all take the time. If you take the time to go apply, if you go back at least 4 to 5 weeks and apply the new week opening gap, you will see a matrix. You will start to see a matrix in price, okay? And price always refers back to these levels that's directly in price. And most people don't even identify. Most people don't even is not even aware of it. You can use these as entries. You can use them as draw on liquidities. You can use them as support or resistance. Okay, so that's what I'm trying to get at right here. It's called the new week opening gap. So for this week that we currently just ended, here goes the new week opening gap. What I did was you take the closing price from Friday, you take the opening price from Sunday. And then you drag it out through all the way throughout the week. Okay. You drag that out all throughout the week. So let me clean this up right quick. Clean this up a little bit. And if y'all just joining, man, make sure y'all smash that like button. I appreciate y'all joining. So as you can see, from Monday, we go higher. Okay. On Monday, we take out the last week's high. And then on Tuesday, we had a lot of high impact news. Okay. The high impact news created all this price distortion up in here. This is another word for price distortion. What they're doing is, whenever you hear me say they're holding price, this is what it looks like right here. That choppiness, they're just holding price. Okay, they're holding it. They're confusing traders, and then boom, they displace it in the afternoon, and it goes lower. Okay, when it goes lower, it comes down and takes out the Asian session low right here. See this liquidity? See these lows? Again, don't want to ignore these lows. You see these lows right here? That's Asia session from Monday. Below those lows, you want to highlight Asia session liquidity. And that's exactly where price drew to. Okay? That's exactly where it went to. Sell side liquidity. That's a target. So if you was able to identify that, you could have got short selling down to these levels. Okay? And that's what I was doing. If I pull up my executions again, let me show you. You can see me taking short entries. Okay, you can see, and some of these were signals, so, but you can definitely see me taking shorts down to what? Is it random that I get out? Down here, you see the arrows? That's me executing my exits. Okay, that's not random. You can see me shorting in here. Why did I short this candle right here? Let's go ahead and highlight this right here. Why did I short up here? You can see these shorts right here, right? That's because I'm getting in sync with price. And y'all, some of y'all in the Patreon, y'all might have seen me like going back and forth. I might be selling buy. I might be sending buy signals, sell signals. That's because I'm getting in sync with price. Let's go down to a 5 minute. And as you can see, as you can see on the 5 minute candle right here, you know what I'm saying, on this 5 minute chart, I'm getting short. Let's go down to a 1 minute. See if I see what I executed on. So as we go down, this is how you know I'm already getting in sync with price. As I zoom down to a 1 minute, and that's the time frame I had to execute on. Okay, as I zoom down to a 1 minute, y'all in the chat, is it random? But tell me what this is. And it's two of them. It's a large one, but what is this right here? Y'all in the chat, y'all tell me what kind of candle this is. What kind of PD array is that? What kind of PD array is that? Shout out to you, Scott. And if y'all not in the Patreon and y'all want to get in there, man, y'all get in there. I'm only taking about 50 people. We don't want no drama. It's cool vibes over there. But if y'all want to get in, y'all click the link in the description. Get in the Patreon, sign up. If y'all want to learn this skill set and y'all want to be a part of this, I already got people in there actually making money. And yes, y'all are correct. So do you see my execution? You know what I'm saying? Just so you know, it's not no bullshit. You want to take the low of this wick. Okay, this is a SIBI, sell side imbalance, buy side inefficiency on a 1 minute time frame. Taking the low of this wick and then the high of this candle. There's a small wick in there, you probably can't see it, but I'm adding the volume imbalance as well. So see that gap right there, that's a volume imbalance. You got to add the SIBI plus and volume imbalance. Okay, and then look at right there. Do you see the precision? Now it entered multiple times. I would have preferred more deeper retracement in there, but that's okay. All you need, if you want a guaranteed entry, look at that. You want to enter at the bottom of the fair value gap right there. You see that? And boom, look at my execution right there on that candle. You see that? That's not random. Okay, that's actual precision. Okay, it's actual precision strikes, just like that. Now you're gonna go into some drawdown. Okay, remember, where do I place my stop loss? My stop loss is gonna go up here or a little wider. So for y'all in the Discord, y'all in the Patreon, I'm using the SIBI. If you know how to identify the SIBI, 9 times out of 10, I'm placing my stop loss. Let me show you. I'm placing my stop loss right here at the top of this candle right here. If I feel it, if I'm monitoring the higher time frame, I might put it a little higher, okay? Just to give myself an extra security blanket, okay? So take it, be able to identify the SIBI, and your stop is going to be above the gap. Normally on this candle right here, that's a pretty tight stop loss. So let's say I measure. Let's take a measuring tool from entry up to the high. That is 9 points, okay? And y'all be in the Patreon, y'all in the Discord, y'all be like, man, 25 points ain't enough. You know what I'm saying? It's like y'all got to work with it. Y'all are brand new, but some of y'all might be experienced. Like when I say 20 to 25 point stop loss, y'all might be like, man, that's not wide enough. That's because you're not on these lower time frames like that. You're mainly on those higher time frames executing. So that's a 9 point stop loss, okay? So if I was to get stopped out, and we're trading, let's say let's just say this was the NASDAQ, the mini. Let's just say this was the mini. 20 times 9, that's $180. If this was a mini contract, that's $180 risk, okay? $180 risk. $180. So if you're trading the NASDAQ, the minis, that's $180. And then you can see where I executed, where I took my profit at right here. You see that? Okay, where did I take profit at? Let me show you the new week opening gap. No, that's not where it was. Anyway, I took profit. I forgot why I took profit there. But let's just measure my TP. From $180 down to right here. That's about 87 ticks, or 87 points. So I'm risking 9 points. Y'all do the math. Y'all tell me in the chat. I'm risking 9 points for 86 points. So if this was the mini, which we're in there trading micros, we can do this in any market. It all applies to any market. So there's no difference. if we do, let's say 20 times 86, that's $1,700 just like that. Boom, just like that. $1,700, and I only risk $180. Took profit on $1,700, only risking $180. What's the risk to reward on that? Excuse me, 1720. You're right, Scott, and only risk 180. Is that like, you know what I'm saying? What's the risk to reward? Matter of fact, let's do it. Let me pull it up. Let me get my short tool, and I'm gonna place it on the entry, all the way down to my take profit. Entry, take profit, stop loss right here. Okay, roughly about 9 ticks or 9 points. So that's a 9 to 1. That's almost a 10 to 1 risk to reward ratio. It's almost a 10 to 1 risk to reward ratio. Okay. You're risking a little bit. You're risking a little. Now, if you had a wider stop loss, like some people, let's say I've said, okay, I'm telling you 25 points. 25 points gives you more cushion. So let's just say 25 points right there. Even at 25 point risk to reward, that's a 3.5 risk to reward ratio. Okay. But you're risking more. Let's see, 20 times 25. And that's your risk. That's how much you're risking. 20 times 25. That's $500. So you're risking $500 for a reward of $1,720. Okay, but what I did was I reduced my risk down to nothing almost, because again, I've been doing this for a while and I understand what price is trying to do. You reduce it down to 9 points, and now you're only risking $180. Okay, $180, and you're taking profit on $1,720. So that's precision guided. You get what I'm saying? Like, this is going on all day in the chart, and there go my execution. So it's not random. I'm sitting here telling y'all what I'm doing. You got to have an account to even be able to do this. Show your execution is what I mean. So let me hide them. Let me go back out to a 15-minute. If y'all got any questions, make sure y'all ask. So that was Tuesday's trading. Okay, Tuesday, it was a chop day, and then at the end of the day, it sold off. Okay, and then once it sold off and it reached for sell side liquidity, which was Monday's Asia low, we chopped around, we consolidated. The day is done. So I know when to get out and get in. Like, I know when to say, okay, this day is over and not over trade. And I know when to just like, I'm not trading today. That's what y'all need to develop. Y'all need to be able to develop when, okay, I'm not just going to trade this session, or I'm just going to wait to the next session, or I'm just going to wait until price becomes more clear. So that's what y'all have to develop as traders, okay? You got to be able to develop that. So let me cross over. Let me hide this again. Hide this. Any questions? And if y'all just joining, man, make sure y'all sign up to the Patreon if y'all brand new. The link is in the description. Y'all come over here, sign up. This is what we're doing. I'm kind of giving y'all coaching. This is y'all time that y'all got me, man. If y'all, I'm trying to tell y'all, this is my mentorship side of it. Well, I'm mentoring you. I'm showing you what it looks like in price. But if y'all want to sign up to the Discord and the Patreon, y'all click the link in the description. Okay, y'all get in there. Y'all sign up. All right. All right, so Wednesday, let's look at the economic calendar for Wednesday. Wednesday, we had the same effect at 7:30 a.m. We had economic news, so the same thing repeats on Wednesday. So let's cross over 12 o'clock midnight on Tuesday. That starts the new trading day. And then we go into London. London did a little sell-off. I think I shorted this as well. I think I sent a signal. Okay, I forget. I'm sure I got an execution in there. Let me see. No, I didn't short that morning. So I was asleep that morning. I didn't get in there, and I didn't get in there. So Tuesday was a difficult day as well. Did a lot of scalping back and forth. When I'm scalping, I'm only looking for 20 to 25 point scalps, and then I'm out the market. Okay, those are surgical strikes. You don't want to be in this long at all. That's in and out the market. On days that chop and consolidate, turn into a scalper. On days that chop and consolidate, you want to turn into a scalper. And how do you pop quiz? How do you know when the days are going to chop and consolidate? Tell me in the chat. How do you know when a day most likely will chop and consolidate? Yep. Shout out to you, Lenny. Yes. So anticipating the news, again, economic calendar, and especially on days where we got a lot of news as well in a week. So also not just the day. If we could see, okay, looking ahead. So let's say it's like Tuesday, and then we can look ahead all the way to Thursday, and it's nothing but red folders all the way through Friday and orange folders. Just expect like, okay, this is going to be a off week. Also, you got to understand, we also broke all-time highs. So people are taking profits. Smart money is taking profits out the market for the NASDAQ and S&P. So once we reach that price level and we're in price discovery, price most likely is going to like do these functions in price, okay? Because it got to build sentiment. So again, here goes another vertical trend line on Wednesday, 7:30 a.m. And we cross over. And let's look at London. London sold off. What it did was, what did London do? London sold up. It took out the Asia session high, 8 o'clock p.m., 12 o'clock midnight. It came up, took out these highs. And when it took out those highs, it traded into this SIBI right here, okay? See that SIBI? Sell side imbalance, buy side inefficiency. You see that? Takes out liquidity, London session high. So you want to identify the previous week's highs and lows, previous days highs and lows, and previous session highs and lows. Okay, so we trade up, we take out Asia highs. So here we go, Asia. That's buy side liquidity right there. Do a trend line. Buy side liquidity. And if you want to extend it, if you see equal highs, you want to go ahead and extend it. So you see these equal highs that let you know there's a ton of liquidity resting in that. And then identify the SIBI. So not only did we have liquidity, we also had liquidity resting inside of the fair value gap. So that's another thing for y'all. We trade up, we take out the liquidity, and then what does price do? It sells off. So if you was up during these hours during London, and London offers volatility, I feel like London offers a little bit better price action than Asia. But us in the United States, you know, we got to get some rest, you know. So it's kind of hard for us to be up during London unless you just got time, you know what I'm saying? Also, by knowing the kill zones, knowing the sessions and the times of the day, you can build your own schedule around certain times of the day. So if you're somebody who's busy in the mornings and want to be able to trade in the afternoon or after lunch, you can build a whole model for yourself. If you're somebody who likes to be up late, let's say you're somebody that works at night, okay, you have a job that requires you to work at night, well, you could be trading during the London hours, 1 a.m. to 5 a.m. So you can build out a schedule for yourself with all these kill zones and all these models in these sessions. You don't have to trade every session. You can build out a whole model for you. Okay. Everybody is unique. Everybody is going to have their own lifestyle. So you can build out a model. I'm a primarily New York session trader from AM to lunch. Okay. And then I can get in there during Asia. Asia is also a great time as well. But Asia doesn't always offer a lot of volume, okay? As you can see, during this Asia session, which I'm going to outline, okay, I'm going to outline the Asia session low right here. See this low? That's the Asia session low. Sell side liquidity right there. Asia session low. And then we had the low of the day. So Tuesday, this is the low of the day. So that's the higher time frame liquidity pool. The higher time frame liquidity pool right there. That's the low of the day from Asia. Tuesday. So you can see liquidity stacked up below the market, okay? Liquidity stacked up below the market. And what I'm doing is I'm just giving y'all examples and trade examples throughout the week. That's what I'm doing. So if y'all find this valuable, man, y'all make sure y'all smash that like button, subscribe if you're brand new. So we trade up, 12 o'clock midnight starts the day. We go into London, 1 a.m. to 5 a.m. We trade up. We can easily identify the SIBI, okay? And we see the liquidity. We liquidate it. Above these highs are sell orders, okay? We trade up into it. and then price sells off. Now, if I drop down to lower time frames, there's a ton of entries, and you can be a scalper down to this level right here. You can take out both of these lows. If you see lows that are stacked up, and one is a session liquidity and one is a previous day liquidity, aim for the lowest low, okay? I'm gonna say that again. If you see liquidity that's stacking up either higher or lower, and it's a previous session liquidity plus a previous day liquidity, always aim for the lowest low, because it's gonna wanna take out all that. It's gonna wanna grab all that right there, okay? So on the higher time frame, we know that price is most likely going to want to reach for something. It already done sold off. It sold off yesterday afternoon. Okay, during this sell off, okay, what is it trying to reach for? What is it trying to reach for? Y'all tell me in the chat. Forget where it went. It's obvious where it went, but in the chat, what is this level right here? What is this green highlighted trend line? What are these trend lines? What did I just identify? What is this level right here? Once we seen that sell off in the afternoon, that's an indication that price is trying to reach for something. And what did it reach for? Y'all tell me in the chat. There you go, Scott. There you go. There you go, Lenny. It reached for the new week opening gap. So it's not random because it's hidden. If I didn't tell y'all this, if I don't identify this to y'all, y'all would not even know this exists, okay? If I just hide it, let me say I hide it. You see it? And let's just look at price. You'll be like, man, what the hell is price doing? You'll be like, you know, if I just remove it, and you'll be like, man, price ain't really making sense. No, it's not random. It's reaching back for levels in the market that you are not aware of. But I'm here I am revealing it to you. It's called the new week opening gap. And I'm going to give y'all another one here in a minute. I'm going to give y'all another one. That's the new week opening gap. And this is going to be my pro lessons. I'll talk about it more in my pro lessons. And as you can see, I got a ton of them, okay? Just for reference, let's just go back. And if you don't know about these, you don't know what the hell price is doing. Why is it so choppy? Because it's back and forth in between these levels. You see this? You can trade through them. You can refer back to them. For example, you can see how price trades through this, and it expands higher, cuts back through it, and then during the process of it cutting back through it, here goes a BISI, okay? And then the top of the new week opening gap. The new week opening gap has more influence over price than fair value gaps. Take that down, jot that down. The new week opening gap has more influence over price than fair value gaps. Now in crypto, this isn't really too much of a thing, but in the futures market, it's a thing. I'm still testing it out in crypto though. Like I'm still trying to test it out in crypto to see, okay, because crypto is 24/7. It doesn't shut down. But in the futures market, we have a closing period and then a reopen. And in that process, it gaps open every time. Okay. And then you can see how price draws down into this BISI, touches the midway point, touches the top of the new week opening gap. It expands higher. What does it do? It takes out liquidity and then it trades back down, touches it again. Look how price reacts to it. Trades back down to it. Do you think that's random? Do y'all think that's random? Trades back down to the new week opening gap, and then boom, displacement higher, and it takes out liquidity again, and then it goes higher. And guess what? It trades to another new week opening gap. You see that? You could have took profit right there. Let's just say you entered right here. Well, let's just say you see this. Let's just say price drops down to the new week opening gap, and then displacement higher. Y'all in the chat, what is this candle right here? What is this candle right here? This down closed candle. What is that right there? I'm starting to warm up to this a little bit. I had to get that morning, you know what I'm saying? You know how you grog in the morning, kind of slow moving, but now I'm warming up to it. Y'all in the chat, what is that right there? The opening price of that candle. Shout out to you, Scott. That's an order block, okay? Order block. So let's just say you see how price trades down to the new week opening gap and it rejects it. It uses it as support. And then boom, displacement higher. It triggers the order block. It's activated. It trades up and then it trades back down. It offers you a buying opportunity. So let's just say you hypothetically, let's say you place an entry. Say you place an entry order right there. Boom, just like that. Okay. And you place your stop loss. Where do I place my stop loss? My stop loss on order blocks. Let me show you. Stop loss on order blocks will be right here at the wick low of the candle. Okay, I done showed y'all. Well, I will show y'all in the lessons how to refine this and how to adjust it. But if you want a safe stop, you place your stop loss at the bottom of the wick of the order block. Okay, so entry, stop loss. You can reduce this, but you gotta be cautious. And then boom, price displaces higher. And where does it randomly go? Okay, if you want to quick get out and don't have to worry about nothing, paying yourself. When y'all in the Discord, y'all in the Patreon, I'm always telling y'all to pay yourself. Pay yourself. Gotta pay yourself. Your exit will be boom. Do you think on this candle right here? Let me zoom in a little bit. You see this candle right here? As it goes up to the midway point of that new week opening gap, okay, that's a take profit right there. Don't worry about it going any higher. Just take profit. Pay yourself. Boom, just like that. See that? Precision, okay? Precision. Take profit. I'm not worried about if it continues to run higher. I don't care, because look what happened shortly after. It reverses. And I don't have to worry about it. Y'all, you're going to have, if you're inexperienced, you're going to have to worry about, damn, should I get out? Should I get out? And this is what price is doing. Should I get out? Should I get out? And then you're just going to sit there and wait for it to come do this and liquidate you, just like that. And then look where I placed my stop loss. You see that? And then look what price did. Comes back down and liquidates you if you held that. We're trying to have precision strikes in the market, okay? We want to have precision strikes. We want to be in and out. We ain't willing to hold it. We want to have certain levels, and I'm sitting here telling you, from entry, new week opening gap, I'm out the market. Now, let's put the money behind it. Let's put the money behind it. Let me pull out my long position tool from entry right here. I'm gonna drag that up to my stop loss right there, and then my take profit, which is the new week opening gap right there. Okay, stop loss. So we're risking about 35 points. Now I'll show y'all some ways how you can reduce this. Okay, let me show you how you can reduce your stop, your risk. Some of y'all are comfortable with that, but if you're trading minis, that's a lot. So if we're trading a mini contract, which is $20 per point. Okay, $20 per point. 20 times, let me see, 20 times 35. That's $700 risk, okay? That's a $700 risk. Now, that's a mini, okay? That might sound crazy, y'all, but you're risking $700 for a reward of 91 points. So 20 times 91, that's $1,800. So you're risking $700 for $1,800, okay? Risk to reward. That's a 4-to-1. That's a 4-to-1 risk to reward. Okay, boom, take profit. Now let's show you how you can reduce that. There's several things you can do with an order block. You can use the wick. I'm gonna ask y'all in the chat, what's this wick right here? What's inside of that? What's inside of that wick right there? Y'all tell me in the chat. What's inside of this wick right here? What's inside of this wick right here? At the bottom of the order block. Waiting for somebody in the chat. Liquidity is resting below it, Lenny. But what's inside of the wick? What I always tell y'all about wicks. What do I always tell y'all about wicks? Don't ignore them, right? Shout out to you, Montu. Yes, ghost levels. Okay, so we're just simply going to use those levels. Let me show you. Take a wick, Fibonacci. I'm gonna drop it from the closing price down to the low. We're simply going to just use those levels. So you see where we had our stop loss initially, right here. See, where we had our stop loss right there. Now let's just say we reduce it up to, let's say, the 0.5 level. Boom, right there. Okay, let's reduce our risk. That's the 0.5 level right there. Now we go from 35 points to 31 points. So we go from 70. Let me see. I believe it was $700 to, let's say, 20 times 31. You're reducing it from 700, I forgot what I said, to down to 620. So now you're reducing your risk. You don't have so much risk on the table. Okay, let's just go ahead. Let's move it up again. Let's say you want to move it up to the 0.75 level. Okay, that's 29 points. Okay, 29 points. So you continue to reduce your risk just like that. Now, another way, if you want a tighter stop loss, now let me show y'all. I showed you this before. If you want an even tighter stop loss to where you don't have little to no risk on the table, let's take a Fibonacci. We're going to place it on the top of the order block, the opening price down to the close. Now the midway point, okay? Now let's reduce. What I'm doing is I'm measuring the candle. I'm using the Fibonacci, I'm measuring the candle. You already know the midway point is the last stop of resistance. So if price decides to trade down and start closing below the midway point of the order block, I'm killing the trade. I'm out of there because it's going to reverse, okay? Once it closes down to the midway point and it closes, it's going to reverse. We can trade down there and reject it and go higher. But once we start to trade down and close below it, that's a signal for me to just exit the trade, okay? It's going to fail. But as you can see, we trade down there one, and we only traded down there one time. So if you wanted to reduce your risk on the trade, you're going to remove your stop loss up to about the 0.25 or just below that midway point of the order block, okay? So let's just say we reduce it right there. That is 21 points risk, okay? 21 points. So we essentially went from $700 down to $420. So you significantly reduce your risk on the trade to $420, just like that. Okay, y'all press one if that makes sense. Did y'all understand that and how to use order blocks and how to reduce your risk? Do you understand that? That's more advanced. That's going to be for the pro lessons, okay? It's way more advanced, but you got it. I'm giving it here for y'all to free. Okay, appreciate it. If y'all just join it, man, if y'all like it, if y'all find this insightful, sign up to the Patreon, get into Patreon, trying to build the community. Okay, so I taught y'all how to reduce your risk using the order block on this trade. So if $700 was too much for you, we refined it down to $420. And mind you, we're mock trading minis. Even though we're in there trading micros, we're mock trading minis. Okay, I'm just back testing, and we traded up to this fair value gap, and that was roughly about $800, just like that. But my point with all this was, we're referring to the new week opening gaps. That's my point. I'm showing you how price can use new week opening gaps and use them as targets and entries, okay? And this one was way back. The one that we took profit on, that was way back in June. So way over here, this small little new week opening gap. What I do is I highlight them every week for the past. Really, they're infinite, okay? They're really infinite. But I go at least 5 weeks with my new week opening gap. So I don't delete them. I continue to drag them out for about 5 weeks, okay? And this one I just highlighted, that goes back all the way for about, let me see, 1, 2, 3, 4, 5. That's a 6-week-old new week opening gap. That new week opening gap is 6 weeks old, okay? And then we got another one right here, probably about 7 weeks old. So that's me showing y'all how they look, okay? So I'm trying to give y'all as much as I can while I got you. Hopefully y'all are soaking this in. Hopefully y'all are taking notice, okay? Now let's go back to what we did this week, okay? I just had to show y'all the new week opening gap. I wasn't going to do that, but y'all got it. If y'all are live here right now, you got it. No, Lenny, they're never invalid because we can always refer back to them. That's why I say they got a better draw on liquidity than order block. The two top draws are liquidity pools and new week opening gaps. Liquidity pools and new week opening gaps. So those have more influence. Cause look what we did. Let's go back to Tuesday. Back to what I was saying earlier. On Tuesday, we sold off, and y'all was not aware of this. Y'all was not aware of this in the Discord or the Patreon. We sold off, and I already knew, okay, we're reaching for these new week opening gaps. And this one right here, it's a blended. They can blend together as well. So they will start layering on top of each other. So look at this one from 3 weeks ago, okay? This one from 3 weeks ago, how we worked in it. You can see how price is gravitating to it and is working it and is using it. You can see it. It's not random. This should let y'all know this shit ain't random. It's all 100% algorithmic, okay? It's not random. It's all algorithmic. I'm sitting here showing y'all how price refers to these levels, and retail ain't aware of it, okay? So this one from 3 weeks ago is blended with the one that we just passed, the week that just passed. So you can start seeing the midway point of this one from 2 weeks ago. See, the midway point is directly at the same level as the high of the one from last week, okay? So they can blend together and it starts looking crazy. You know what I'm saying? And they start referring to them. So let me hide this one. I just want to focus on the one this week. Smash that like button, subscribe if you're brand new to the channel. If y'all got any questions, comments, I can answer. Send them in the chat. Send them in the chat. So, yeah. So Tuesday, I'm already knowing Lenny and y'all in the Patreon. I already know where prices want to go. So let's come back to Asia and London session on Tuesday and Wednesday. Asia on Tuesday, we cross over at midnight Wednesday, and guess what we do? We trade up into this SIBI. We attack the order. So if I'm bearish, short term, not higher time frame, intraday I'm bearish. So intraday I can be bearish and bullish both directions. But you got to understand what the higher time frame is doing. Okay, so hopefully y'all got that. Let's drop down to a 5-minute. On the 5-minute time frame, okay, on the 5-minute time frame, now we're a little closer to price. You can see how choppy price is. It's definitely a high resistance, very choppy, not clean at all, okay? So it's still tradable though, don't get it twisted. You can see how price goes up, takes out the high, buy side liquidity right there, Asia, trades up into the 1 hour SIBI and then sells off. Now all the way in here, you could trade this. So let me see if I can find a trading example. And it's very difficult to find. Let me see. You can use this inversion fair value gap right here. You see this? There's an inversion fair value gap. Or, very difficult because the wickedness, you will get chopped out. If you're brand new, you most likely will get stopped out. So right there, let's use that right there. Let's use that SIBI / volume imbalance right there. You see that? This is a 5-minute entry. But what you have to be cautious is this wick. You see that? So let's just say you initially, price is about to sell off, and this is what happens. It spikes up and it liquidates everybody trying to get short, just like that. And then it comes all the way back down, and then the real move eventually happens. If you get stopped out, you can always re-enter if you're really confident in, okay, price is about to do that. 1 second, I gotta readjust this. Let me readjust this. 15-minute SIBI. Down to the 5-minute. And that's why you got to understand that sharp run higher. You got to understand what the higher time frames are doing, because price can do this right here. It's manipulation. That's pure manipulation. People that's trying to get short, they're getting them out just like that. Spikes up, liquidates everybody trying to get short, and then it starts to roll over. It uses this 5-minute fair value gap, and then it rolls over. It sells off, and it attacks the Asia session low and the low from Tuesday, just like that. So shorting the market, and then it runs even further down to the top of the new week opening gap. You see that? That's what I mean by precision. Okay, that's what I mean by precision. That would have been a good short. So if you was aware of the new week opening gap, you could have held even longer. That's what I'm trying to sit here and tell y'all. You could have took profit at the liquidity pools. But if you knew that the new week opening gap existed, you could have held this short down to that level. So let me go down to a little bit further price action. Let's go down to a 1 minute. And let's see if we can find a cleaner setup on the 1 minute. Let's see if we can find a cleaner setup on the 1 minute. Hopefully this is insightful, man. Hopefully y'all are learning. I know it's probably a lot. Remember, I'm 5 years in, you're brand new. So I'm throwing a lot at y'all at once. So on the 1 minute time frame, y'all can clearly see, I would not want to trade this, me personally, because look at the back and forth. Look at the high resistance price action. Okay, look at this. It's not clean at all. So what you have to do is you have to wait for this to clear up, and then you want to start seeing institutional sponsorship displace price. Okay, you want to start seeing displacement. And displacement looks like this right here, where you get consecutive candles like that, and price starts to open up. Okay, you don't want to be in this chop. You see the wicks is doing damage. The wicks are definitely doing damage in the market. You want to see price displace lower, and then guess what? Y'all in the chat, what is this candle right here? Once you see that displacement, that's an indication that institutions have stepped in. What is this candle right here? Tell me in the chat. This is a 1 minute time frame. It's a SIBI, not a BISI. Sell side imbalance, buy side inefficiency. The BISI is opposite. Like, for example, let me see if I can find a BISI. A BISI would be this right here. Okay, this is a BISI. Buy side imbalance, sell side inefficiency. Because it's going up. It's in balance, only offering buying. So it's inefficient in sell side delivery. Okay, that's BISI. Buy side imbalance, sell side inefficiency. And then sell side inefficiency, buy side imbalance. Sell side imbalance, buy side inefficiency is when price is going lower because it's only offering selling and they didn't offer any buying. So the algorithm is going to want to refer to these levels to offer buying. And that's exactly what it does. It trades back up. Remember, you want a guaranteed fill. You put your entry at the bottom of the fair value gap. So let's just say we enter at the midway point. Okay. If you got a limit order, if you want to get in the market, you don't want to have to stress about getting in and waiting for price to come to your entry point. Always set your limit order at the bottom of the fair value gap right there. Okay. So let me show you right quick. Let's come over here. I'm going to do this. Sell. Put that in the market. See over here on the top, that's my limit order. Okay. The first thing you want to do is when you set your limit order or when price strikes your limit order, you want to set your stop loss. And again, what did I tell y'all? Pay attention for the people that want to understand how I'm setting my losses. That's a $60 stop loss. Okay. I'm putting my stop loss at the top of the fair value gap, not the top of the fair value gap, but the top of the wick of the gap. So hopefully y'all understand that. Right here, that's my stop loss right there. Okay, you see that stop loss right there, and then you look over. If you look all the way over here to the right, that's $60. That's my $60 stop loss. My take profit, let's just say, is the bottom of that new week opening gap. And what I'm doing is I'm zooming out. Take profit, bottom of the new week opening gap. See that? I don't care about it trading through it and going further. I don't care. We need precision guided strikes. Okay, in and out. So that's an $834 trade right there. Okay, so that's what it looks like. As it sells off, as it retraces into the 1 minute fair value gap, it starts to sell off. You got to endure all this consolidation in here, expansion, going lower. It attacks Asia session low. It attacks previous day's low from Tuesday, and then it trades through it. And then it eventually goes down to the top of the new week opening gap, just like that. See that? Precision guided. Okay, snipers. We over here teaching snipers. We training y'all to be snipers. Just like that. So, let me zoom in right quick. Let's add our risk. Let's show you what that looks like with the short position tool. From entry down to take profit. Top of the fair value gap. Boom. Okay, that's 69 points. 69 points. And this is a micro, by the way. If this was a mini, also for y'all that be like, man, 25 points ain't enough for risk. Well, this particular trade is 4 points. Okay, this particular trade is 4 points, 4.75 points, almost 5 points. So if this was a mini, which is $20 per point, let's show you how much risk that would be in a mini contract. 20 times 4. Let's go ahead and just say 5. 20 times 5. That's $100, okay? That's $100 risk on a mini contract. This is a micro, but that'd be $100 risk on a mini. And it went down for 69 points. Let's go ahead and round it off to 70. So you're risking $100 for $1,400. How good is that? How good is that risk to reward? That's a 14-to-1 risk to reward ratio. 14-to-1. Okay, and I'm showing it to you right here, how to outline it, how to see it. 14-to-1 risk to reward ratio. Okay, what could that do for you? How powerful is that? Where you're only risking $100 for $1,400. You're only risking $100 for $1,400. But you got to understand what I'm showing y'all. Y'all got to understand these levels in price. You got to understand what I'm highlighting for y'all. You got to understand the fair value gaps, the liquidity pools, consolidation, expansion, retracement, reversal. You got to understand high resistance. You got to understand low resistance. You got to understand the new week opening gap. You got to understand the day of the week. You got to understand the economic calendar, okay? You got to understand all these things. How long did it take for the trade? Let's outline that, Lenny. Let's go ahead and outline that. So from entry, I'm gonna put it right here on the entry, all the way down to take profit. Right here, boom. That trade took 1 hour and 11 minutes. 1 hour and 11 minutes. You can see right here at the bottom in the highlight in the red box. 1 hour and 11 minutes, okay? To risk $100 to reward of, how much did that say? 1,700? 1,400. So 1 hour to bank $1,400. And guess what? You can be done for the week, okay? Why? If you're somebody who works a job, your job ain't gonna pay you an extra $1,400 a week, okay? They're not gonna give you an extra $1,400 a month. But this is all during the London session. You get what I'm saying? This is all during the London session. 1 hour and 11 minutes in the London session. You say that's a good hourly rate? Hourly pay rate? Hell yeah. In the markets. In these markets, hell yeah. You could be done for in 1 hour, you could be done for the one. So let's just say you only looking for one strike for the week. You don't want to be in there in the market all week. You looking for one good trade setup. And I'm talking about for the week. Boom, just like that. And your equity, depending on your equity, depends on how much you can put in on a trade. So if you're somebody with a lot of capital, $10,000 to $100,000, and you can put it up to trade, then you can use 2, 3, 4 mini contracts. So this can get real crazy. If you just multiply 1,400 times, let's say 5, everybody's money is different. Y'all that are in crypto, y'all gonna be very well off. So y'all gonna be able to do this type of trading eventually. But if you, let's just say you got 1,400 times 5 contracts, that's $7,000 on this trade right here. If you was to use 5 mini contracts, that is $7,000 on this trade that I'm outlining right here that took 1 hour and 11 minutes. Okay, it took 1 hour and 11 minutes. Imagine doing that and being done for the month. Let's just say y'all are rich in crypto, y'all are well off or whatnot, or y'all just doing good for yourself. That's your monthly, like how much more money do you need per month? Okay, why get greedy? One trade, 1 hour and 11 minutes. Yes, I agree with you, Lenny. I agree with you. So this is the power of this, okay? Like you, first of all, you're gonna get there one day if you aspire to do this. Again, nothing out there beats trading, okay? That's just my honest opinion. No industry. That's why these are the capital markets, okay? That's why these markets are the economy. These markets are the biggest markets in the world. That's why institutions like the biggest banks, the biggest institutions are in these markets daily, okay? Because the rich and the wealthy don't work. I'm gonna say it again. The rich and the wealthy don't work. They don't clock in at a 9 to 5. They put their money up and use their money they put their money to work for them. Okay? The rich and the wealthy put their money up and they use their capital to put the work for them. They don't believe in clocking in. And this a new economy, this new world that we're going into, the new digital age, the AI age. People are being laid off. People need to earn new skill sets because you're being replaced out here. Okay? But if you're somebody who needs a new skill set, this is one of the most sought after skills out there. You know what I'm saying? And once you get it, nobody can take it away from you. That's why I pursued this. Jantel, that's what they do. Yes, right now what I'm doing, if you can prove your results, there are firms, there are banks that will hire traders. That people do that. So as a trader, you got options. Check it out. There's firms that do this, okay? You can go get you a high earning salary, damn near probably $1 million salary or more, or a 6-figure salary working at a bank, trading their capital, using 50, whatever they got in capital. They're going to tell you, okay, we only want to risk this much, There are firms that do that. At the same time, you might be earning a commission. You might be getting bonuses. At the same time, you're also able to trade your own capital. But me personally, I'm going to tell y'all about me. I don't want to pursue that route of trading other people's money, okay? I'm not comfortable with that. Even though you might be hired to do so. I don't want to trade other people's money. I only want to manage my own money and build my own wealth and my own capital, okay? It's best to be independent. That way you're not obligated to nobody. But yes, there's people that do that. There's definitely people that do that, Jantel, for the rich. They hire people because they don't trade neither. They hire people that got the skill set to trade. And they don't do shit. Yes, that's what I mean, Lawrence. So it's best to just learn this skill set and be independent. And so many, I'm already seeing, just being on YouTube, so many opportunities open up because I have this skill set and I have obtained the skill set. And as I continue to grow, I can only imagine so many people coming to me, good and bad, wanting the knowledge and the information that I have, because I'm sitting here on YouTube showing and proving to y'all. Y'all in the Patreon, y'all in the Discord, y'all are seeing it, y'all are witnessing it. Y'all are witnessing it. If y'all brand new to the channel, please subscribe. And if y'all want to sign up to learn furthermore, y'all click the link in the description. Y'all get into Patreon. Y'all figure out what tier y'all want to get in. Y'all get in there. And it's a good, I think I'm building a good community. We got some bad apples in there here and there, but hey, we good. We good. You know what I'm saying? We growing. So again, we just back testing the week. This is just Wednesday of this week during the London session. Okay. That's another trade example right there. Okay. I can show you dozens. I can show you how price reverses after taking out liquidity and goes in the opposite direction. So I have to do I have to do hours long seminars and shit. You know what I'm saying? Which I haven't built myself up to that yet. I have not been able to get up here. Cause once I get about that 2 hour, that 2 hour mark, I start to wear down sitting up here talking. So let me hurry up. Bad apples get concrete boots. Yes. But yes, man, if y'all learn this skill set, man, there's so many doors that can open up to you outside of yourself. You know what I'm saying? Like, yeah, firms and banks. Now, another thing, you don't need a degree, okay? You don't need no type of education. You need education as far as learning this skill set. But I'm assuming, like, because of AI institutions and whatnot, they're going towards AI. So they're going to want to use algorithmic bots, trading. So they're probably going away from the human element. So it's best for you to learn this skill set on your own. It's best for you to learn this on your own and be independent, okay? And don't rely on nobody. That's what I'm sitting here trying to teach y'all. Don't rely on nobody. Let's zoom out right quick. If y'all got any questions, answer. Jantel, you said, I meant me to hire someone when I'm rich. Yeah, why, Jantel, why not just learn? You in here, Jantel, why not just learn this shit? You in here for a reason. I'm assuming you're curious about it. So why not just learn it? Why depend on other people having that overhead hiring people when you could just do this on your own? Okay, why hire somebody when you could just learn this shit on your own? And imagine just being rich and being able to go pluck off the tree as much as you want. Go to the apple tree or the fruit tree and just pluck out whatever you want. At that point, if you're rich, you kind of can gamble a little bit. I ain't gonna lie. What's the trade I just showed y'all? 1,400, 5 contracts, and that was $7 grand. Let's just say you're rich and you want to kind of like risk it a little bit. You just kind of want to gamble because you're rich. Let's just say you add 15 contracts, and people can do this. So take 1,400 times 15. Y'all tell me what that is in the chat. Jantel, get into Patreon, bro. Get into Patreon. So you can have, if you slowly learning this off my channel, it goes deeper into Patreon. So 1,400 times 15, that's 15 contracts on that trade I just showed y'all. How much is that? I'm waiting on y'all. Yes, it's $21,000, okay? Imagine being rich, and that was a scalp. If y'all don't know, that was a scalp. That trade took an hour and 11 minutes. And let's just say you were somebody who was rich already, and you want to kind of like, you got more, you rich, you can do what the fuck you want to do. So if you want to put up some money and take a little risk, you can do that because you're rich. So let's just say you put on 15 contracts and you send a short. Shout out to you, Follow the Profits. Appreciate you joining. Let's just say you want to take a quick short, a quick scalp in the market, and you're already rich, then bam, you bank $21,000. What can $21,000? What else do you have to do for the rest of the month? What do you have to do? First of all, if I'm rich and I bank $21,000 on a trade, I'm already frugal. Okay, I'm not no flashy person. I'm gonna be the same person. Now I just earned $21,000, and money is just digits on the screen. So I can, with $21,000, I can go help some family out. I can go help people out. I can go to the grocery store. I can find old ladies and stuff and buy their groceries for them. That's the type of shit I'll be doing. Okay, I'll be going to the grocery store, finding old ladies. If I see a single mother with kids, I'll be buying their groceries for them. Appreciate it, Gentel. Because you're rich. Like, you have enough on a scout. I just showed y'all on a one scout, boom, in and out the market, $21,000 because we rich as fuck. And now we just gonna take that money. We're gonna cash out. We're gonna withdraw that money into your bank account the next day. Okay, it might take 1 to 3 days. Well, we're going to an instant payment, so it might be instant. Because y'all know stable coins are cryptocurrency stable coins are now legal in law. So we're gonna start getting instant withdrawals instantly, settlement right there in our bank account after taking a $21,000 trade. And then you can just go out in the public and just imagine you're rich, and then you just bank 21,000, and then the next day, your whole entire day is blessing people out in the world. You know what I'm saying? Just going out in the world and blessing people. You going here, hey, I got that for you. You going there, hey, I'm gonna pay for your groceries. Or you getting your car washed, I'll pay for that. Just doing shit like that. You know what I'm saying? Just because. And you're not doing it in a flashy way. You're not making noise. You're not trying to stand out. You just subtly blessing people out in the world. That's the type of shit I want to do. Yes, there's definitely power, man. That's the type of shit I want to do. Okay, just because. If you got family members helping, like, you know what I'm saying, your family members know you rich over there, but because you got this skill set, it kind of like, some of y'all are worried about, especially in crypto, y'all are worried about getting rich and family and people around you, and you should be, okay? But imagine getting rich and then learning this skill set and then being able to trade and go and take out 21,000 in the market, and then going to those same family members that kind of envy you and just giving them like, take this $1,200, you know what I'm saying? And use it as a test just to see if, like, okay, are they gonna come back later and ask for more, or was this good enough? Did this fix them? You know, just using it as a test. That is power. And guess what? Yes, I agree with you. Lenny. That's the type of shit. This is what, you know what I'm saying? This is what you can be doing with the power of these markets and the power of money. So that's why crypto is essential. That's why I blend the two. Crypto is essential for a lot of us. A lot of my people in here are crypto people. We in the right assets. We're not in meme coins. We're in the right proper assets. You know what I'm saying? The XRPs, the ISO, the new financial system assets. We're in the right assets. We already seen major gains. And we're sitting here long term investing into digital assets. Now blend that with trading. Okay, blend that with trading. And that is power. I'm telling you, that's power. It's power. And that's what I'm sitting up here trying to teach y'all. All right. Being long-winded, but I don't mind it. Okay. I don't mind. I'm putting in that work. If y'all brand new, please subscribe. I'm trying to get back into 1,000. Let me see how many people I got over here subscribed. Let me see how many people I got subscribed right quick. 1 second. Because I'm almost to 1,000. I hit it last night, but YouTube wiped it out. I don't know what the hell. 972. So if you're in the chat, please subscribe if you're not subscribed. 972 subscribers. On the road to 1,000. Again. Let me read these comments. Gentel, appreciate you, Follow the Prophet. Shout out to you. Gentel, I want to be locked into this when I'm able to quit my job. You can be, Gentel, you can be. And Gentel, was that you? No, that was somebody else. My bad. Somebody was in the chat last night in the live stream talking about, you know, I'm thinking about looking to take profits on XRP. And I'm like, why the hell would you even think about that at this moment in time? But that wasn't you, Gentel, because I was going to say, that's going to allow you to quit your job and then be able to do this full time. Okay. Holding on to those digital assets will allow you to quit your job in the future and be able to transition into doing this full time. And it's going to take y'all about a year and some change to practice. Again, I've been in this for 5 years, so it's not going to be overnight, but at least you will have the time to do this every day, getting repetition. What's up, Hamid? Shout out to you. Montu, you said that is the real skill, making money and keeping it. Most people give it back in a few bad trades. Yep. What I teach Montu is we only take 1 or 2 trades in a day, okay? 1 or 2 trades in a day. If you up in the week and it's at the end of the week, like Friday, like I was telling y'all, like Friday ain't no ideal day, even though we found the quick trade. Friday was not an ideal day in the market, okay? But we still found opportunity in that. But Thursday of this week was the best day. Thursday of the week. It just boom, expanded higher and we took out Tuesday's high. I was in that. Did I live stream that? But I definitely was in that. Let me pull up my channel right quick. Just to show you some results. I'm gonna show you probably results from Friday. Appreciate the subscribers, man. Appreciate the subscribers. If y'all want further, if you're new to my channel, this is an educational channel. I'm not out here, you know what I'm saying? I'm very humble. I ain't out here trying to compete with nobody. I'm just out here trying to just teach technical analysis. Yes, I got a mentor. If y'all are brand new to my channel, y'all understand who ICT is. That's who I was mentored under. But now I'm just doing my own thing. You know what I'm saying? Like I have grown from being up under his wing and now I'm just doing my own thing. So I'm transparent about that. So if you rock with me, you like my energy, I appreciate y'all joining, man. If you like me, you rock with my energy. So this was from yesterday. Y'all in the Patreon, y'all was in this. Y'all seen this happen. And what we was doing was I was looking for a short down to the 4-hour fair value gap. I'm gonna go over that in a minute. To hell with an economic ninja. You over here getting that real deal over here. Can't you tell the real deal from the fake and the phony? Okay. So yes, this is me shorting yesterday. We was in this, y'all in the Patreon. This is the trade I was in. And I was shorting down to a 4. I was scalping. This is what you call a quick scalp. As you can see, price was high resistance. This was a difficult morning. It was not ideal. I was trying to get in early. I got stopped out a few times because I was trying to be early to the move. I knew exactly where price wanted to go. Okay. I knew exactly where it wanted to go, but it's how do we get there? Okay. It's how do I get in for that move? And I got stopped out like twice. See that right there? You see how price just shot back up like that? That's why my stop loss is high. And that's the manipulation in price. Okay. That's the manipulation in price. And you got to be able to be cautious of that. It doesn't always happen, but most of the time it does happen. So you got to know when to identify high resistance, seek and destroy, manipulation in price. Okay. And then I know exactly where it wants to go. And eventually it starts to loosen up. It goes from high resistance to low resistance, and it's going to loosen up. And it's going to go down to the midway point below the screen in the orange highlighted area. It's going to go to the midway point of the 4-hour fair value gap. That's going to be my target. And this is the signal. So y'all, I was trying to get y'all in this, but it was very choppy if y'all got stopped out. You say you're going to send me a super chat about XDC. I don't want to interrupt through. Oh, you can go ahead. I can review it since we're here. It's part of the technical analysis. I might as well. So if you want to, if y'all don't know, if y'all want to send me a super chat, we can review whatever y'all want me to look at. Send a super chat. Any market y'all want to look at, we can review it. If y'all send super chats, that's my thing now. So if y'all got a special request, just send a super chat. Now, if I'm already talking about it, you don't have to send a super chat. I'm not expecting. If I'm already talking about a market that y'all already wanted to see, you don't have to send a super chat. So yeah, man, I'm just holding this trade. I sped it up. So this trade actually took longer. It sped up. Okay. What leverage is normal for trading XRP, for example? Well, we have to come to the futures market. I'm not trading XRP, the digital asset, and I haven't traded the futures contract as well. So I'll check that out in a minute. Give me a second. I have not traded crypto futures yet because Bitcoin is liquid, but XRP is not liquid enough for me to trade the futures contract for Bitcoin. I mean, XRP. It's still kind of choppy. It's still not kind of refined. So we're waiting for more institutional capital to come in. That's me zooming out right quick, trying to get that higher time frame. Perspective. And I'm reaching, I'm holding for it to drop down to that midway point. I was doing this on my tablet as well. So it kept like sending that message. So ignore that. Don't excuse that. So we're just holding down. You can see take profit. I'm using 6 micro contracts. So in the Discord, in the Patreon, we're getting y'all started with micros, okay? Because micros are affordable. And boom, just like that, take profit. So that's what we did yesterday. And that's what trading looks like, okay? We did that. We executed. People in there witnessed it live. Some people made money off of it. So we just come to price. Let's zoom in. You can see Friday expanded higher. That was a very clean move on Friday. We participated in this. Y'all already told y'all I wanted to aim for this high right here. Y'all was in that. We aimed for the high from Tuesday. That was at the time, the all-time high. And we traded up. Boom, took that out. Then we consolidated. We went into Friday. And then on Fridays, we're going to get the high of the week. It peaked out on Friday. This is the high of the week. And it retraced down to this 4 hour. Let me go out to the 4 hour. Okay, this 4 hour BISI. You see that? Y'all, what is this? I'm gonna ask y'all again in the chat just so y'all can confirm. What is this? I got a super chat. 1 second. I'm gonna get to it right in a second. What is this right here? Y'all in the chat. Let me see right quick. It's a BISI. It's a BISI, Montu. It's a BISI. Let me highlight that right quick. DH. I'm about to get to you in a minute. 1 second. Trying to get the people informed right quick. So yes, y'all are correct. It's a BISI. So that short that y'all just seen me highlight, that's what we traded down to. Okay, that's what we traded down to. I knew, okay, we peaked out for the week. What we did was we traded up higher. We took out previous session high, and then we wanted to retrace to close the week. That retracement is the closure of the week. So if you're on the weekly candle, we got an open, low, high. It creates the high. Where's the high? The high is right here, and then the close. Retrace down. I wanted to target the midway point. We got that. I shorted down, took profits, and that was it. That was the end of the week. I didn't care what else happened the rest of the week. Let me go down to the 15 minute. Go down to the 15 minute, and you can see that sell off. That's exactly what it looked like. Boom, midway point. And after that, I told y'all in the Patreon, I told y'all in the Discord, I'm done for the week. There's no need to go back in. Y'all was profitable. There's nothing else to do. And shortly after, look what price did to end the week, just like that. I also tell y'all, my protocol is I don't trade after the AM session on Fridays. Well, the AM session, it was very choppy, and it offered one move down to the 4 hour fair value gap. And after the AM session, guess what? Choppiness, consolidation. That's not random. That's just repeating over and over in the market. Just doing this every day, showing up in the market every day. I understand that because I've been doing this for 5 years, that on Fridays, after the AM session, get out the market. And guess what? People in there start still because you're money hungry. You're not disciplined. You're impulsive. You're still going to be in there trying to trade this. I got to get me something. I got to get me something before the week close. And guess what? They chop y'all out. Okay? You got to simply wait for the next week. It's not random. So let me get this super chat. DH 2025. Boss, I was in BCTX looking good when they did a public offer. It dropped to 80 cents. What is a public offer and how could I avoid this? I'm not sure what a public offer is. This a stock? But let's go ahead and pull it up. DCH. What is BCT? Excuse me. BCTX. Let me go look that up. Public offering. If y'all know what he's asking about the public offering, it's a stock, I'm assuming. I'm just going to give it to you from a price technical analysis. DH 2025. Because I'm not heavy into stocks like that. I'm just going to pull up a random let's just pull up. Let me see. Okay, it's a pharma stock. Let's go look at it. I'm gonna pull it up. We're gonna look at it from an analyst, because that's what I do. I'm a TA person, so to analyze it. Cancer stock. Okay, BCTX. Is it BriaCell Therapeutics Corp? Is that it? Confirm to me. Is that it? Before I click on it. Cancer stock. BriaCell Therapeutics. Okay, let's go look at it. So let me go out to a higher time frame. Remember, always start on the higher time frame. Let's go out to the 6-month time frame. And this stock currently is trading at 79 cents. Okay, it's not looking good. I ain't gonna lie. It's at 79 cents. But if you DH, you say it's a cancer stock. Explain to me. Give me some more context. Be brief, but explain to me a little bit more. What is this? Okay, what is this? What is it about? Because I want to know myself. Okay, but it opened up in 2010. Damn, it's been around for a very long time. So is this considered like a penny stock? Matter of fact, let's do this right quick. BriaCell Therapeutics Corp. I'm gonna pull it up. Let's do some quick research. Okay. BriaCell Advancing Cancer, and they've been around since 2010. Okay. Developing novel therapies to destroy cancer. BriaCell is a clinical stage immuno-oncology company that is developing an entirely new class of targeted immunotherapies to transform cancer care. Okay, I'm not familiar with this industry. Okay, that's why. Listen, please inform me, because I'm not familiar with this industry. And if you have more insight in this sector, how big is the cancer sector? I know it's in the medical. DH, you said they are giving hope to people who are on their last leg of treatment. They made it to the top level 3 with great results. Okay, they're giving hope. Okay, from a financial perspective, okay, yeah, they can be giving hope, but are they the leader of their sector? See, okay, this is what I ask you. This is what I do, DH. Who are they competing with? And if y'all are familiar in the chat, who are they potentially competing with? Stocks are hard, bro. Stocks to find the new unicorn stock. That shit is hard unless you know. Lenny, if you in the chat, Lenny, you be bought. You know about Palantir early. So how do you find unicorn stocks? They did a public offer. So let's come back to the chart. You said there are lots of competitors. They was running until the public offer. Jantel, if you got, I'm not familiar. If you got any other type of method, use that method. I don't know what Apple got going on, but DH. Okay, let's just break it down from a price chart perspective. Okay, I zoomed out. They've been around since 2010. Okay, they opened up. When they opened up, damn, the hell. Oh no, I'm gonna tell you in a minute. 1 second. Lenny, you said I stay away from these stocks. Too much is dictated by trials. That makes sense, Lenny. But check, and this makes sense. Look it out. DH, when this stock opened in 2010, it opened at $5,674. Okay, $5,674. And then it crashed all the way down to 79 cents. Make that make sense, DH. Now, what are you trying to get in this for? I'm just curious. I'm going to analyze it, which right now is not much to analyze because it's at the basement. But what's the risk? What is the risk to reward that you're taking on this? Because I'm going to tell you like this. You're probably better off just playing meme coins, okay? This stock opened up at $5,674 and it crashed, okay? It crashed from $5,674 all the way down to 79 cents. DH, like I said, I'm not familiar with this. Is brand new to me. Okay, you telling me something that's brand new to me. I'm sitting here telling you that you asked me why did they take a public offer. I can't tell you that because I'm not familiar with this. This is brand new to me. So I'm asking you, You told me, what is this? And I understand what you're saying. This is all brand new to me. So all I can do right now is tell you what the price is doing. When y'all send, okay, let's get this cleared up. If y'all send me a super chat, okay, it's going to be pertaining to market, price action, technical analysis. I can't answer every detailed question about why did this company do that. That's not what I do, okay? If you want me to analyze something, that's what I mean. Send me a super chat. I can't tell you why this did what it did. DH, was you invested in this? DH, was you investing in this? I'm trying to do my best to help. Are you investing in this? And I'm trying to figure out, okay, what's your strategy? You're asking me, but are you trying to invest in this? You sent your payment, so I'm trying to do my best to provide some value. Are you trying to invest in this, or are you investing in this? What's your deal? What's your situation? You said, yes, you've been invested in the past few months. I'm out now. Okay, what was your average buy-in, DH? What was your average buy-in? And if you're out, did you get out? Because I already can tell why you got out. Did you get out because of the lack of price action? Did you get out because it wasn't doing anything? So you got in at $2. So a few months. Damn, it just been continuing to go lower. So I'm gonna just say this is a monthly time frame, DH. This is a monthly time frame. And you say you got in at $2, which ain't bad because, goddamn it, it's just been going lower. What did this company do? What did they do? I'm just kidding. What did they do? What company just opens up, go public, and just do this right here? I'm not familiar with this. Okay, this is brand new to me. But if you got in around $2 and you said it's been about 2 months, okay, about 2 months, you did right by DH. You did right by just cutting ties with it, okay? Because it's damn near going to go to zero. They had positive. Okay, let me tell y'all about these markets. DH, let me explain to you. Let me explain to you my perspective, okay? Let me explain to you my perspective. This is what I believe, because we all know the markets are rigged. Who's in control of the markets? And this is what I teach on my channel. Who's ultimately control in all of the markets? Who's in control? And this is what I believe, in my honest opinion. Lenny, you said they had no money. That's why they did the financing. What's up, Foundation? Who's in control of the markets? This thing is going to, and I appreciate you, Lenny, DH. That's why I want to create this community, because each one, I don't know about this. Lenny knows more about stocks than I do. I'm a trader. I can go to any market and trade, but I'm not all the way deep into stocks like that. So we got some veterans in here in the stock market. So that's why I appreciate the community in the chat, because y'all are helping each other out. You know what I'm saying? Y'all can provide answers, and it's not no arguing and bickering. So hopefully he provided value to you. Shout out to you, Hamid. Yes, institutions. So what I was asking was, who's in control of these markets? And I said institutions. So this is my point, until institutions, because every stock that y'all see is driven by institutional capital. When an institution wants to bring up a certain stock or whatnot, they're going to do it with their liquidity. Once you go, okay, let me explain it like this. Once you decide to go public, okay, check it out. Listen to what I'm saying. And some of y'all know this already. Once you as a company decides to go public, you no longer own your company. Who owns your company once you decide to go public? Just give me some entities, okay? This happened to Facebook. This happens to everybody that decides to go 100% public. You gotta offer something, okay? You gotta give up something to go public. Give me some entities. Start naming entities. Once you go public, who starts to buy up everything? Who starts to control a percentage on the back end of your company? Boom, there you go, DH. You know this, right? BlackRock. Who else? What's the other one? What's the other major asset management company? We got BlackRock. What's the other one? Start naming them. There you go, Lenny. Vanguard. BlackRock, Vanguard. When you look at the back end of a lot of these major companies, I'm talking about the major ones. So what you think these smaller companies that want to go public, like they could be like, well, we ain't got no use for you right now. You know what I'm saying? How many major companies went public on the stock market and in they first 10, 20 years, they ain't had no use for them. And then now they're giants. Matter of fact, let's go. So DH, hopefully I did provided you some value. Right now you did right by getting out of this, because guess what? It's only continuing to go lower. It's only going lower, okay? It's only dropping lower. Okay, so hey, let's look at Amazon. Okay, let's go to Amazon. Let's go to Amazon, okay? And let's go back to the early days of Amazon. This is Amazon right here. Appreciate it, DH. Appreciate it. If we go back to Amazon, the early days of Amazon, okay, 1997, Amazon opened up at 12 cents. Here we go, 12 cents. 12 cent stock, okay? 1997. 97. This is crazy. From 1997, I'm gonna highlight this area for you. From 1997 right here all the way to about 2001, okay? Even further, to be honest. Let's go out to about 2004 right here. 1997 to 2004, which is over a decade, okay? Amazon was trading between under a penny. No, excuse me. Amazon was trading around 7 pennies up to $5.69 for over 10 years, okay? There was no use for Amazon at that moment. It was just a stock trading, okay? And it continued to do that from 1997 all the way, let's just say about right here, okay? From 97 to about 2009. Who remembers in 2009? Amazon was not a thing in 2009, okay? Amazon was not a thing in 2009. From 1997 to 2007. 2009, about 12 years, okay? Amazon was trading between 7 pennies and $5.67, okay? And then boom, what does it do? It starts to get utility. They start to have use case in the world. And guess what? Amazon is up. It went higher than that. Then they split the stock, whatnot. But it's at $226. That's what I mean, okay? That's nothing but institutional sponsorship and them propping up saying, okay, we want a monopoly on this. We want a monopoly on online commerce. Also, Amazon has AWS. So they got shit they can provide. Data centers, etc. They got software that they can provide, and the world, institutions, the way the world is going, they need all this shit. So it's utility. If you don't know, certain companies got utility like Amazon. So if you're not offering nothing that's needed in the world right now, like, I get that, okay, a company like this, buy or sell, they're in testing, and I agree with Lenny. If they're just in this phase right here, that's cool until the world, until institutions need you for some utility. They might listen. Check it out. This might not get propped up until they create a bioweapon. Think about what I just said. A company like this might not even get touched until they create some weapon. What can you offer to the government at the end of the day? That's what I'm saying. What can you offer the United States government? Can you create a bioweapon? That's the type of stuff I'm saying. For sure. All right. Anything else? But so back to the futures market for y'all that's here to learn, because I'm about to head up out of here. So let me go out to that 1 hour, and I'll probably do a crypto live shortly. I don't think nothing's going on in the market right now, but I might do a crypto live. Let me do this. So for y'all that are in the Patreon, y'all in the Discord, this is y'all homework, okay? Y'all in the Patreon, y'all in the Discord, this is y'all homework. This is what y'all need to be doing, okay? I'm about to tell y'all. You said BTCH will go when they lift the NDA on cancer. Okay, now I'm gonna ask you this, DH. as a investor, as a business decision to make as a business person, because when you putting your money to work, you're making business decisions. If you know that, okay, there's NDAs on that, and the only one I would make an exception for is XRP, because you already know they had that lawsuit. That's the only exception. When we talk about the new money system, that's a whole different ball game. But if we talking about STEM research and etc., is it a smart business decision to put your money into something like that in hopes that the NDA, not even knowing when the NDA will be released? Is it a smart business decision to put your money into that, knowing that, okay, this industry, you know, it's not really moving right now? Lenny, Henny, Hamid, I'm gonna get to it in a second. So for y'all in the Patreon, y'all in the Discord, and if you're not in the Patreon and Discord, y'all click the link in the description and get in there. Make sure y'all subscribe to my channel as well. I'm almost at 1,000. But what's the first thing y'all need to do? Y'all need to be setting up for the week ahead, okay? Y'all, if y'all do this today, you won't have to do it worried about it tomorrow. You'll be ready to go. What's the first thing we're doing? What's the first thing we need to do in the market? This is the first thing we need to do in the market. What's the first thing in the charts we need to do? This y'all homework in the Patreon and Discord. Shout out to you, Lawrence. Yes, identify. This is what y'all do this weekend, or when y'all get off the live stream, or y'all doing it now. Identify last week. So what you're going to do is you're going to take a vertical trend line. Okay, you're going to drag it out to next Sunday. Okay, next Sunday, 6 o'clock p.m. Okay, next Sunday, 6 o'clock p.m. Okay, just like that. This Sunday opens up at 6 o'clock p.m. Identify the previous week's highs and lows for the past 2 to 3 weeks. Okay, so just go back. We already took out the highs. Okay, so you don't have to worry about that. And then you want to go back in time and just refer to highs and lows. This just helps you get practice. Okay. So definitely, most likely, identify the previous week high and low. So last week's high and low, just like that. Sell side liquidity, buy side liquidity. Buy side liquidity is above the market. Sell side liquidity is below the market. Okay, that's what you do. Identify where the liquidity is. Next thing you want to do is you want to identify the new week opening gap. Okay, highlight this. Identify, and you started off on the 1 hour time frame. If you don't know, start off on the 1 hour time frame. And you want to identify the closing price from Friday. And I'm already doing it right here. So when Sunday opens up, you got to wait for Sunday to open to see what the opening price is. So you got to wait for Sunday, 6 o'clock p.m. So the closing price right there, you want to calibrate it. Closing price from Friday was 23,228.75. 23,228.75. Okay. And now we just wait for Sunday open. And when we open on Sunday, it's going to gap open. It might gap open high. It might gap open low. We never know when what they're going to gap it open at. So we got to wait and see. Okay, we got to wait and see for the gap. And once the gap's open at 6 o'clock p.m. Sunday, we can clone this and then find the opening price on Sunday. And then what we're going to do is, just like I did down below, you want to find the midway point of the new week opening gap, similar to fair value gaps. Find the midway point, and then what you're going to do is you're going to drag it out all the way for the entire week. And then this is another homework assignment for you. Do this for the past 3 to 5 weeks. So identify the new week opening gaps from the past 3 to 5 weeks in the charts. Okay, that's what you want to do, and just refer to them, because price is eventually going to want to refer to these. And that's it. To be honest, that's it. And we're going to wait for Sunday open. Determine your bias as well. Go ahead. Well, we kind of got to wait to see how we open up on Sunday. But if you just go out to a higher time frame, let me hide some of this. Go out to a higher time frame, say the weekly. Okay. This is the weekly time frame. You can clearly see the NASDAQ and the S&P is breaking out. Okay. We're going out higher. We're breaking out higher. So we're waiting for the opening price on Sunday. That's going to start the new week of trading. The opening price on Sunday. And right now, by just looking at it, what's your bias? What do y'all see price reaching for? Do y'all want to see it come up, take out last week's high? Or do y'all want to see it come down and drop down to this BISI right here? Y'all see that? That's a buy side imbalance, sell side inefficiency. 1 second, let me highlight it. That's y'all BISI right there. So what's y'all bias? What's y'all bias? What's y'all direct? Okay, Lawrence, you say down, but now Lawrence, now you got to be cautious. Now that's cool. It's either or, Lawrence. We're currently in price discovery. We're currently in price discovery. Okay, we're in price discovery. So I'm gonna stick with the trend. Check it out. You got to understand the higher time frame bias. Stick with the trend going higher. Okay, I'm gonna remain bullish until otherwise. Until I start to see like this right here. Once I start seeing this breakdown or something like this, that's going to indicate to me that, okay, we're reversing based on the higher time frame. And now I probably will shift to only looking for shorts. But in the meantime, price discovery, I'm only looking for buys. But if you're going to look for shorts, look to be scalping 20 points, 25 points per trade. Okay. 20 points, 25 points per trade, scalping if you got a short. If we decide to break down and come lower, we already got to identify. Maybe this is a breakaway gap, meaning we create a fair value gap and it moves away from it and never returns to it. That could be a potential breakaway gap, but you got to keep it in your chart, because that if we start to break down, we're going to break down. We're going to attack the liquidity and most likely come down to this SIBI. Okay. I mean, this BISI, but right in the meantime, I'm still sticking to bullishness. All inside of this is going to be building market structure. So you're going to have like some choppy days where you're retracing, going down lower. Identify the new week opening gap, because that's a key level. Identify where the liquidity is. We got previous week's lows, so I'm going to remain bullish, sticking with the higher time frame trend. Oh, what's up, Jay Manson? Kind of came in late. Definitely go back and watch the replay if you missed it. But just sticking to the trend right now, bullish, and that's my bias. My bias. So write it down. If y'all in the Patreon or Discord, I'm bullish for the week until other notice. So we can be flexible. Okay, you got to be flexible in this. You got to be able to adjust and adapt. That's analyzing. I'm not worried about motherfuckers saying like, oh, you know, you got it wrong. What about this? You're going to get it wrong. Okay. That's part of analyzing. You're going to get it wrong until you get better. That's the whole goal. So we're waiting for the opening price on Sunday, and I'm going to remain bullish until to other notice. So that's going to be it for that. That's y'all homework for the night. And let me see. Hamid, if you come to the CME, Hamid, come to the CME, okay? Come to the CME. Go to markets. Go down to cryptocurrency. If you want to trade XRP futures leverage, you want to go to cryptocurrencies. And under cryptocurrencies, you want to find XRP. Okay? Now, XRP futures, okay? Click on that. And you want to get the, you want to go to specs. Go to specs. You want to scroll down, and it's going to tell you the leverage. So you want to look at minimum price fluctuations, and here you go right here. It tells you the leverage. If you're trading, the margin, the leverage, whatever. If you're trading XRP, every 0.0001 points or ticks for XRP is $5, okay? So if price goes from 0.001 to 0.005, which is 5 ticks, that's $25. So I'm only teaching from the futures contract, futures market perspective. If you're on other exchanges, I don't trade them. If you're on like exchanges that are unregulated, I don't trade in that environment. So I can't tell you what to do in that environment, okay? But Hamid, just come to the CME group. It's the cmegroup.com. Go to their website. It's going to give you exactly what you need to know as far as leverage trading XRP futures, okay? So do that if anybody's interested in that. Man, I got 29 people in the building, man. Y'all make sure y'all subscribe to the channel. Make sure y'all go back and hit that like button. Also, if y'all want to learn more of this skill set, y'all get into Patreon, okay? Get into Patreon. Right now, I'm taking about 50 people in the mentorship and signal. So if y'all want to position yourself and get in that, y'all make sure y'all subscribe to that, okay? So hopefully this was insightful for y'all. Appreciate y'all joining. I will go live maybe this evening, maybe to definitely tomorrow morning. Coinbase has nano futures, Lenny. Yes, Coinbase has nanos. I don't know if they got the full contracts yet. They might. I haven't been over there in a while, but they definitely got the nano futures contracts. We might even get into those as well. They're very inexpensive. They're more cheaper than the micro contracts, so we might get into those as well. But shout out to everybody joining, man. Please hit that subscribe button. I'm almost at 1,000, man. YouTube was hating. I hit 1,000 last night, but they hating, so I'm trying to get back up there. So I got less than 30. So yeah, man, y'all sign up to the Patreon, and for y'all that's in the Patreon, I see y'all in there. Also, y'all enjoy y'all day on this Saturday. We'll keep in touch. Watch the crypto market, because I think XRP is about to, we about to continue going higher with XRP. So shout out to y'all, man. Until the next time, peace out.